Hello everyone, welcome to this webinar today. As part of our tools to create opportunities, we're going to talk about Tradies Charge Out Rate Calculator. I'm Peter Towers, the Managing Director of ESS BIZTOOLS, and I hope you're having a great day. Isn't it wonderful that things are on the track to return to normal around Australia with the announcements from, first of all, the New South Wales government, and then the Victorian government, and the Queensland government also has announced a plan to get life back to normal. So let's hope the rest of the country also does the same thing over the next few weeks. Because for accountants, this will help us to better service our clients. For those of you who are watching this webinar live, if you have any questions, please type your question in on your computer in the chat, and I will answer the question later in the webinar. If you're watching this webinar on the Facebook Live link, you will not be able to click back in to ask me a question, but you can please send me an email, peter@essbiztools.com.au. And the same applies to those of you who like watching these sorts of videos at a time more suitable to your daily routine. If you have any questions, please send me an email. Factors to consider in setting charge out rates for trades businesses. First of all, an opening comment. Every accountancy firm has got some tradies. Some of you have got hundreds of them. Some have got 10, 20, 30. I find that a lot of tradies businesses have been ignored by the accountancy profession over the years. What tends to be done is to prepare a set of financial accounts and a tax return. This discussion today is asking you to dig down into their figures, to assist them to set a charge out rate which will earn a targeted profit for their business and for you to manage that for them. I think that's performing a virtual chief financial officer role for you or for your firm to be offering this to your client. And obviously, if you have got 50, 60, 110, 150 of these tradie clients, then it's a very sizable fee category within your firm. So the type of things that we got to look at when we're setting charge out rates is the labour on costs for individual classifications, because they vary. Some people get more holidays than others. Some people might be getting paid higher superannuation. Some people may be having more leave, whether it's training, study leave, or whatever. There's various categories of team members, isn't there? And our system has provision for that. What's their salary or their wages? What superannuation percentage is applicable to them? What's the standard rate is 10%. Some people have negotiated higher superannuation payments. How many hours are you going to pay them for the year? The standard hours are 1,976, which is 52 weeks at 38 hours. What leave entitlements are they going to have, both for statutory holidays, personal leave, and any other type of leave that the business may have agreed to? What training do you envisage? 5 days, 6 days, 20 days? If they're apprentices, how many days do they need for training to go to TAFE College or wherever they're going for their tuition? Is there any payroll tax? So we've assessed the payroll tax attached to each individual person, and it would be the percentage that does apply to that business, because in New South Wales, for argument's sake, the first $1 million is not taxable, and it's 4.65% for wages and salaries and directors' fees and superannuation payments over that amount. So you might put a figure in if the payroll is going to be under $2 million at around 3%. What's the workers' compensation rate that applies to that category? The holiday pay loading, some employees get it, others don't. How does it work out? Shift work, rate allowance, are you paying that? And very importantly, what's the budgeted productivity percentage for each team member? And your client might say, oh, we're going to get 95% out of all these people. But I have found over the years that that's a overestimation. Even if we're taking it after we've deducted all of the leave and training allowances, get your client to think that through seriously and set the figure the right way. And the overhead expenses, what are they for the business? We've got provision in the form where you can type in the full overhead budget, or you can just slot in a total figure. If you're doing this for a client, I'd be typing in the full overhead budget so they can see it. But you don't need to include payroll tax, workers' compensation, or superannuation, because we've already covered that in the direct costs that we were looking at. An important area for tradies is that most of them go out and buy gear, products for their client. It might be that they buy light fittings. It might be that they buy the carpets. It might be that they buy the paint. And all this is recovered from the clients. So what's the budget and amount? You have to have a look at the client's records to determine that. And are they going to mark up those external purchases to cover their time involved in organizing those purchases, perhaps selecting them and then making sure it's delivered and installed properly? It might be that they've obviously got to use their own credit facilities, so it's potentially tying up some of their credit facilities whilst they wait for their customer client to pay them. So what are they going to add on to the cost? At times I've been told 25%, but when I've checked later on, I found that they were not getting that, because sometimes they negotiate not to charge anything at all. Other times they forget to put the markup on, or it just seems to disappear. So what's the markup percentage on external purchases for clients? And how are they going to treat that markup? Serious question. Are they treating it as a separate profit item that's going straight to bottom line and staying there? Or are they going to use it to subsidize the labor charge out rate? And our forms, which I'm going to show you shortly, give them the ability to be able to show that in their calculations. And what's the profit target? Do your tradie clients even think about the profit target and a realistic target? The form will say, what's the investment in the firm? They can put a figure in and put $500,000 in. What rate of return would they like to make? You could put 20% in or any figure, and it would calculate $100,000. But some people mightn't be able to visualize what they think the investment in their firm might be, and they might give you a figure, $70,000 or $200,000. It will then go into the calculation, because basically all of that, all of those costs and that profit have all going to then be recovered by the productivity of their workforce at an hourly charge out rate that I think is best set on the individual categories of people. Also, you might want to consider a markdown write-off percentage. I really don't like that, but we live in the real world, don't we? At times there are markdowns. If your client wants to budget for that, we can put it into the system. And the charge out rates for each category of team member will then be determined by the charge out rate system. And it will then give a profit and loss forecast. I hope there's not too many losses. It will give a profit forecast as to how the business is going to go in the activities. So I'm now going to take you across and share our trades charge out rate calculator. You should be able to see that on your screen now. I've already inserted the name of ESS BIZTOOLS. You need to always tick enable content, so I've just ticked it again. I've just called this business Tradie Business, and I set this chart up yesterday, the 18th of October. We have a set of instructions to help you go through and use this system. So this is obviously the package that you're getting along with a paper and a few other items to assist you in understanding how this system works. We then have calculation of labor budget. So that's where we start with, in the labor budget. And in our system, we have a number of categories. So within permanent full-time employees, we have 6 categories. Now, I put the information in yesterday. So we started with a manager, and we said, when the manager gets 25 days annual leave, he doesn't get holiday pay loading, receives statutory holidays of 10 days and holiday personal leave of 10 days, gets a superannuation rate of 12%. The payroll tax for this business overall will work out at about 3%. He does have his hands on the tools, so his work care rate's around 4%. This is a Queensland business, so the long service leave entitlement will build up at 4.33 days per annum. I missed training. The manager does 5 days training per annum, so we've factored that in. The full year, there's 260 potential working days. And then we're showing the deductions. The system's calculated this. So you only have to insert what's in the yellow items. It's taken off the annual leave, the statutory holidays, personal training. So we've got a net working days of 210. And the system then calculates the on costs to be included in the calculation. So there's total on cost for this category of 20.67%. The next person group we had was foreman. They work for 20, they have annual leave of 20 days. They get paid the holiday pay loading of 17.5. They get 10 days off for statutory, 10 days off for personal. 10% is their superannuation, and they're doing 3 days training. They're in Queensland, so the system's made the calculation, and their on-cost percentage is 20.1%. And then we have tradesmen. They're slightly different, although the overall rate is the same, 20.1%. They're working 1 day more because there's 1 day less in training. And then so I've deliberately gone through and spaced these people out so we can see the effect. We've then got an office manager and clerical people. We've then got some apprentices, and they're getting the 25 days off for training. And we have tradesmen working shift work so that they get paid the shift work allowance. So you've got all these various categories. And the whole idea is you just insert in a line another type of employee if they conform to the percentages that you put in here, or the days that you put in here for the on cost. So I think you've got plenty of flexibility there when you look at the 6 columns, because there's 6 categories then in each. We then go down to B1. Now this is for permanent part-time employees. So we got some laborers. We're saying if they were working full-time, they'd get 20 days. They would get 17.5%. If they're working full-time, they get 10 days of statutory holidays and 10 days of personal leave. They get 10% super and so on. They're going to do 1 day on training. They're in Queensland. So normally in a year, they would have worked 1976 hours. You then have to insert the numbering working days in the year that you think they'll work. And I said 160. I think they're going to do that in 30-hour weeks, and they're going to work for 30 weeks in the year. So they're going to work 900 days. So that's 45.5% of the total. And then the system will then calculate what their net working days are going to be and what their on-cost percentage is. We have similar things then for clerical, pastime, and so on. And then we go down and I then use, we got one group in casuals. So we got general duties. They basically only receive superannuation, they get paid, and there's costs of payroll tax and work care for them. And I've put them in that they're going to be paid $35. Sorry, they're working weekly work hours for this cake, 28. They're going to be working 35 weeks in the year, and the annual working hours 980. The system's calculated. We got their on cost. We then move into the calculation of labour budget. We just go back up to the top. Now, what the system's done is it's transferred from the labour on cost, the manager, the foreman, the tradesman, the office manager, and the clerical classification, the apprentices, and then the part-time permanent people, labourers and clerical part-time, and then down under general staff, the casuals with general duties. So if we go back up to the top, what you've got to do is insert the numbers in each category, which you can see that I've done, and insert the individual gross salary. The system, once you've inserted that, the system's also transferred the labour on cost. If you recall, these were the percentages that were calculated back in the labour on costs. They've been transferred across, so they're in the system. So as soon as you insert the number of individuals and the salary, the system then does these calculations, transferring in the labour, transferring in the leave, which is the leave that was calculated in the labour on costs. So it varies for each category. And it will then calculate the net individual work hours. And then your role again is to insert the productivity percentage that your client believes that these people will achieve. So I'm just going to move the screen across a little bit. So hopefully you can see all this on your computer screens. So we've moved it across. So the top category there is the manager, the individual targeted hours. We've paid him for the 1976, but we're receiving 638 because there's only one of him. So the system goes through then and calculates based on these percentages, which you can change at any time, of course, what the chargeable hours are going to be. We then do the part-time people. Now, where we've got down to the clerical part-time, I've inserted nil for their productivity, and I probably forgot to mention that in the office manager and clerical. I'm assuming that we're not going to charge any of their time. So for the greatest respect to those people, we're saying there's no productivity percentage. That's been a bit unfair, but I'm assuming the business is not going to be able to charge that out to customers. If they can, if there's something they're doing that's going to be able to be charged, you'd put the percentage of their time that you believe it's going to be charged for. And the same thing then with the casual. So we're saying 60% productivity for those people. So the system's then calculated what the total cost of the payroll and associated overhead expenses of payroll tax and workers' compensation is. 1,845,000. And also calculates what the total paid hours are, 42,788. And we've calculated the business can charge out 21,727 hours. And I'll just move it back over here so you can read it. So the targeted business productivity is the total chargeable hours divided by the total hours, and so it works out at 50.78%. We then ask the question, what's the net investment in this business? And the client's saying $500,000. is their investment, their targeted rate of return 20%. So they want to earn $100,000. We're then ready to move into budgeted overhead expenses. Now, I've been lazy. I haven't gone through and put the budget in, but I've got that in a separate file. If you're the accountant, that's what you'd be saying. And the overhead expenses worked out at $450,000, excluding the labor on costs, because remember, we have them in the calculations. We then look at the budgeted materials. Now, this business said that they're going to direct purchase $750,000 worth of products during the year. Their targeted markup percentage is 15. Obviously, they can change that. So the markup dollar figure is 112,500. We then ask the question, what percentage of the markup do you want to use to subsidize the labor charge out rates? In other words, to be taken into account as an income item in determining the charge out rates. And they said 60%. So 60% of the 112,500 is $67,500. And the difference then is 45,000. You can play with those figures and it will vary the result, of course. We then asked for what's the write-down percentage, and they've said 2%. So the system then is totally determined, pardon me, the targeted income from sale of labor. We had 1,845,000 as the labor cost. That figure there, 1,845,253. So it's been transferred in. The return on investment, you remember, was $100,000. We had $450,000 in overhead expenses. So we had total costs to there of 2,395,253. We're deducting the $67,500 that we're said we're going to use that markup to subsidize charge out rates. That figure could be nil, of course, if your client wants to hang on to the full $112,500. So that's then given us a amount to be charged in labor of 2,327,000, because we've reduced what it was going to be. And then we want to recover allowances for write-downs. So we said that they were 2%. So that's 36,905. So the target to recover in labor is 2,364,000. You might have nothing there for that allowances for write-downs. You just ignore that if you don't want to put that into the calculations. The system then goes through and calculates the base time costs. It's basically looking at the total labor costs, so that's the direct wages plus the on costs for each category. And it's looking at the hours worked for those categories. It's then calculating a base cost per hour. And then we are transferring in the chargeable hours, and it's calculating for us a base cost per chargeable hour, base cost based on the chargeable hours. And that's gone through and done that for each category. You will notice in the office manager that it hasn't transferred any figure across because we're not charging them to customers. And the same with clerical and the same with the clerical part-time, but all the others have got charges coming across for them. Okay, and we just go back to the calculation of labor. There's the chargeable hours, 21,727, and there it is back in here, the 21,727. And there's the total labor costs of 1,845,000. So it's been charged out. The business overhead factor is then calculated by dividing the total of the labor to be recovered, which was 2,364,658. You might recall this figure here, labor to be recovered, 2,364,658, and it's divided by the base cost chargeable hours, and that's that figure there, 960,181. So it's giving us a figure of 2.463. On its own, it doesn't really mean much, as far as I can see, but it's very important in the calculation to apportion the charge out rates to be level. We then go through and have this calculation of the charge out rate. So we're looking at that base cost per hour multiplied by the overhead factor, and it's giving us a chargeable rate, and then our system rounds that off. The system's gone through and worked out these charge out rates. It's done a charge out rate for office manager and clerical, but we're not using them. So they're just the rates that have been established. And we then go through and look at the actual proof of charge out rate. So the manager, we're saying he's going to be charged out at $165 an hour. Remember, he's only working or charging out 40% of his time. So 638 hours. The income projection's 105,000. The foreman, charge out rate of 135 and going to generate 267. The tradies, 112, 1,261,000. The office manager's figures appear, but we're not going to earn any revenue. The apprentices, $66. Tradesmen, working shift work, laborers, clerical part-time, no income forecast. The general duties people projected to produce. So we get a total of 2,361,143 is the income we're going to generate. Now the system will now produce the budgeted profitability. We've got sales of material of $862,500, which is the materials purchase of $750,000 plus the markup $112,000. So that's the 862. We have in our system the labor to be recovered of 2,361,000. We've got the allowance for write-offs taken off that figure. We've got the materials cost us 750,000. You might recall labor and labor on costs come to 1,845. So we got a total of 2,595 to there. Got a gross profit of 591, 485, which is 19% of the total sales figure. We got the overhead expenses to come off of 450. So we're showing a forecast net profit of $141,485. Now let's reconcile that. We had a targeted return of $100,000 and we were retaining 45,000 of the markup. So we should have got 145,000 in the balancing on the charge out rates. We're showing a drop there of $3,000 odd. But the general picture is that what you've been able to show to your client is a proof. Now, if the client wants more, well, you can go back and adjust. If the client's not happy with that the charge out rates might be a bit high, you can say to him, well, we can forfeit this other 45,000 by reflecting that back into the charge out rates that are being charged. And that's how the calculation works. And hopefully you can utilize that to have these conversations with your clients to work through what is happening within their system. So I'm just going to check if we've got any questions. I can't see that we've got any questions. If you can think of something you want to ask me, please do so. Now I'm now bringing the PowerPoints back up. So you should be able to see the PowerPoints now. The next thing that I think you can then do with your client, you've set the charge out rates. Everyone's happy. I think it's important that you then talk to the client about preparing the monthly financial accounts, because that way you're going to be able to monitor how the figures have worked out. So you can reconcile the labor charged in your profit and loss account as compared to the tradie charge out rate calculations. You can probably develop a key performance indicator report where each of the team is showing their actual charge out hours for the month as compared to what was budgeted. So you can quickly highlight who's not performing to the level. Now, what you might find is that you've put 85% in for tradies and they can't achieve it. Or maybe one can't achieve it because you've also got him doing other duties. Well, take him out of that tradie group, put him as a separate item so that his particular circumstances are shown separately so that the calculation can be made. Don't just do this exercise and leave it as if it's stuck in concrete. It's meant to be a workable document for your client. One of the key things that accountants have got to do, I think, is be supplying this virtual chief financial officer service. And that doesn't mean you only talk to your client once or twice or 3 times per annum. It means you're talking to them all the time and helping them better run their business. And the culmination of all this, I suggest, should be the monthly business review meeting, where the results of here's your profit and loss account for the month. Here's the key performance indicators comparison so that we can see how each person performed. And these are our suggestions on fine-tuning the charge out rates for the next month so that you can help the client to maneuver during the year rather than waiting to the end of the financial year, another 4 or 5 months after the end of the financial year, and then saying, geez, your charge out rates could have been a bit higher. Now's the time to do it. And this is doing real business advice. I got clients utilizing ESS BIZTOOLS doing this. One of them's got 110 tradies, and he's offering this full service and charging them around $5,000 to $7,000 each over and above the annual accounts tax return fee. So it's generating around $600,000 to $700,000 in revenue out of this group of tradie clients. Could be interesting for you to look at. So this is some of the key performance indicators that I was talking about. Summary of individual team members, hours worked versus leave, net hours, productivity percentage. Okay, so tools to create opportunities. That's what our campaign is at present within ESS BIZTOOLS, because we really want you to get out there and get to work on being able to supply these services. We're presenting a accountant's minute later this week that's going to feature a gentleman who's referring to a webinar that I attended last week that he was the host for in Australia, utilizing an American academic but business person as well. And he forecasts boom times for the next few years. He believes it's the same as what happened after the Spanish flu in 2019, where the roaring 20s of the 1920s, I don't know if I said the wrong dates there before, but 1917 to 1919 was the Spanish flu. In 1920, the era that became known as the Roaring 20s emerged. And that was because it was boom times in business. There was plenty of money floating around. If your clients get into this boom time, are you going to be there to assist them on that journey? So your investment for our special package is only $795. And someone asked me in an earlier webinar today how much a week that was. And it's $15.29. That's about half the 6-minute charge out rate used by partners in accounting firms. Think about it. 50% of a 6-minute charge out rate for the week is your investment in being able to start to offer business advisory services. I don't see why anyone would be hesitating. You need to get started. unless you are going to remain solely on tax returns and annual accounts. And if that's your decision, that's great. But for those of you who are wanting to develop real accounting services to supply value-adding services to your clients, this is your opportunity, because other people are also looking at this. And not every client is going to be interested in you doing this. Some people will do it themselves, and others will go their own way. Okay, so $795, which includes GST. I should have taken GST out of that calculation. It's a great way to introduce a range of diversified services to your firm. Now, there's 7 great products, but we've included 4 of them in every package. Then you can pick the other 3 out of 22 packages. But the 4 are there deliberately because we want you to be able to go through some training program that we've developed. There's 13 modules in that, but it's our training to give you a better appreciation of what's involved in the delivery of business advisory services. We produce a newsletter each month, and you get 2 editions in May, one on the federal budget as it affects SMEs, and the other one on an end-of-year tax planning. You badge that and send it to your clients. And it's a marketing tool for you and a reference tool for your clients. We produce ESS papers. In fact, you get 343 of these papers in this package, and that is spread over 60 different categories that you can badge and send these papers to your clients. You can charge them for them if you want to. And the big inclusion is the SME needs analysis, because this is a special product that we've developed, which gives you conversational points to sit down and talk to a client so you can find out what the client wants. The client might be worried about their succession planning. The client might be worried about their debtors days outstanding. They mightn't even know what their debtors days outstanding is, but they know they've got a lot of money owing by debtors and they want some assistance. It might be that they would like to do some research and development and they don't know where to start. By sitting down and just talking with them and using the guide in the SME needs analysis, you get the client to tell you. And also, this is part of you convincing your client that you understand these services, you can supply them to them. Because many of your SME clients will think that all you're interested in doing is annual accounts and tax returns, because that's all you've traditionally done for them. So the SME needs analysis assist you to bridge the gap. And then you can select 3 additional products. And you can subscribe to others if you want to, but the $795 is covering 3 additional products. You've got business health checks, which is really key performance indicator summaries. And we've got 5 industries there, which you can pick one. We pick the whole 3 from them if you want to. We got business planning. We got the Tradies charge out rate calculator that I just showed you. That's part of the deal. We got a similar calculator for professional firms, very similar, except it doesn't have the markup on external purchases. We got a retail wholesale stock mix and pricing calculator. Great for any of your clients in retail who don't know where to go because they got various products, haven't they? Various markups applied to them. They've always got some star stocks, but they've also got cash cows, things that they've basically got to have, but they don't make much money out of them. And then they can have problem stocks, might be last year's fashion or something there's only a few left of it. And then they got the real problems, the things they wish that someone didn't buy. They wonder who bought them. Invariably, the boss bought them. But so how does all that get a mix? How can you picture yourself as the virtual CFO of a client in a retail environment? I was in that situation once in a listed public company. I was the CFO and had to sit down and make sure that the accountants that were working for me all over the east coast of Australia were able to communicate to their managers what this sort of exercise was showing them. Buying a business. Yeah, there'll be still people buying businesses from now on and selling businesses. So how do you go about helping a client buying a business? Client mentoring and coaching modules, communications that we've prepared that you can send out, client seminars and webinars. You've got 12 of them, whereby you can start communicating with your clients, either in person now that a lot of the rules are being demolished about lockdowns. You'll be able to have seminars again. But you might want to continue to run webinars or start running webinars with your client. Crowdsource funding, equity raising. Any business in Australia, as long as it gets incorporated as a company, can raise up to $5 million in a 12-month period as a crowdsource funding equity raising company. If you've got clients interested in doing that, I want you to be able to help them. So you've got the package. We've got a debtors management system to help you advise your clients on debtors management. Australia's got the highest debtors days outstanding in the world. I think that's a national disgrace. And hopefully this system will help our subscribers play their part in getting that horrendous figure reduced. Early stage innovation company, great for young companies, not young people, young companies, to be able to get the costs down. Government grants identification via ESS Biz Grants. We need you to understand the grants that are available, so you can look at being able to identify them for your clients. Leadership modules that have been developed by an associate of mine who has developed a series of leadership material training, and that's available within the system. And the personal property securities register due diligence system. Very important for a lot of your tradies who can get caught out on preferential payment claims if their client happens to have a liquidity event and they have a liquidator or receiver or trustee in bankruptcy appointed. So they're the 22 packages. You pick 3 of them. You got 4 that are standard to the system. You end up with 7, and you are underway for $15.40 a week, $795 per annum. Now that special offer lasts for another 2 weeks. Come on, if you're serious about offering business advisory services, I think you really need to have a look at this. Oh, I missed a few, sorry. Selling a business is also included. The SME Debtor Systems Manual, Succession Planning, and Survival in Difficult Times. And you can go onto our website and get a summary of each of those. So you need any more information, if you want to subscribe on this product, or you'd like to get the subscription form for this package, just send us an email and we'll send it all to you. peter@essbiztools.com.au. Our next webinars on Thursday, the 21st of October, a couple of days time, we got business health check supermarkets. On Tuesday, the 26th of October, we've got understanding crowdsource funding equity raising that can assist your clients. On the 27th of October, we have seminars and webinars which can assist you to communicate your services to clients and prospects. And we got more. And we got leadership modules on the 28th of October. So you can have a look at those. If you want to register for those webinars, please go to our website, www.essbiztools.com.au. And while you're there, you can have a look at our brand new website, and hopefully you'll be impressed with it. If you want to contact me, please send me an email, peter@essbiztools.com.au, or telephone me on 1-800-232-088. Thank you for being with us today. Stay safe, and I hope that you're out of all these restrictions in the near future. And if you're already out of them, don't celebrate too much. because there's a lot of work to be done to help the SME clients really perform well to make up for some of the time that's been lost. Have a great day. Goodbye. And I hope everything is going well for you.